come for the first time. They were not there in the last week. So I'll just start again with the setup I use. My screen is visible. Okay, thanks. Yeah, I will quickly go through the last setup first because many people might have joined for the first time. So it will help them to, because as I said, this is just a basic discussions on what I use and how it worked for me in the last week trades. That is what we will discuss in this meeting. That's all. Okay. Now this chart is from Zerodha IQ charts. In Zerodha you get two options, either trading view or IQ charts. So I am using IQ charts, and um, so I'll just take off everything first and put it back so that. Okay. So again, this is 5 minute time frame. What we are seeing is the um, 5 minute candles, the 5 minute reactions. I think all of you are aware of what is a candlestick. Otherwise, you can just Google it out for candlestick. Simply, it is the closing and opening and closing of the price in the 5 minutes time frame. We can change time frame from here to 5 minutes, 15 minutes, whatever in days. There are different time frames available. I'm using 5 minutes for the intraday trades I do. Mostly, I'm doing scalping nowadays, so I'm using 5 minutes on this. Sometimes I use 1 minute, but it's not recommended because 1 minute I use only when I want to see certain reactions, but it is not recommended to use 1 minute for any beginner level trader. Okay. Now about the indicators that I use. I have been using many type of indicators for the last 4 years. I have finalized some settings for me. 1 second. Somebody is joining. So some indicators I am using now. For indicators, they are all lagging indicators. They react after most of the price action has happened. Now, why I'm using these indicators? Nothing else. There is no much difference in different type of indicators. I used to use Bollinger Band. I used to use MACD, ATX. Just that I am comfortable with this, whatever I'm using as of now, and I'm like, it. For the last 4 years, I'm using the same chart. So it gives means my eyes are used to these type of indicators and the reactions that happen. And there is no sacrosanct rule for applying indicators. Some people, they apply many type of indicators which might be working from there for them. Some use volume profile, some use volumes. I tried to use, but somehow I could not. Maybe I could not expertise on those things, so I am not using them anymore. Basically, if you know indicators, the mathematical formula, they all come from the price. They're based on price and time. So ultimately, it's a price action that matters in an intraday trade or in a short period trade. For longer periods like swing trades and all, then you need to see the fundamental of the stock and things like that. But for what I'm doing intraday in a very short time frame, technical things have helped me. Okay. Now, how to apply indicators is Zerodha. You have to go to studies and then search for the first one I use is the pivot points. I'm not going to mathematical details of what is pivot points. These are Fibonacci pivots or standard pivot points. Doesn't matter much. If you right click on this, you can see the settings. This is standard. You can use Fibonacci also. Both works fine. Let me show you with the Fibonacci. Before in the screen, you might have seen some shades. So those shades are just for my own eyes to get more accustomed, because I like those shades. That's why I keep them. So if I select shading here, you will see the shades. These reddish zones are all like resistance as of now, and the greenish zones are for these days. These are the supports. So please join it. Just 1 minute. For the green, for these days, these are the supports and these are the resistance. So once any say for here, if the resistance, the support is breaking, it can become a resistance once it breaks. So these points, what I was trying to tell, that resistance supports are not something fixed. This is just a reaction. So once uh, a support breaks, it can start acting as a resistance. Okay, you can see this here. Okay. The next one is central pivot range, or CPR. If you, some person was asking me in Twitter also, if you put CPR, you will not get anything. Basically, you have to start with central. It will show you the this option. So I apply. I use this one, central pivot range. So this is a central pivot range. There is a central pivot, and there is a upper band, and there is a lower band. Now again, for CPR also, you can Google for the mathematical formula. It's basically calculated based on the previous day's prices and where the most reactions, or we can say the movement of capital, smart money has happened. So those mathematical formula and all, you can check in the internet. You can get it in Investopedia or in Zero the Varsity also. I think it might be available. Normally, many sites are giving those theoretical formulas and all. So once I apply central pivot range, I'll just apply the moving averages that I use. I use two moving averages, 20 and 200. So there is some people use 9, some people might use 50. Doesn't matter. For me, as I said, this is what I'm using for last 3-4 years. So my eyes are more accustomed with this. So in moving average also, you can choose the type of average you want. I am using exponential because that is what is I felt after following this a bit useful more than simple. So exponential, I keep the red color for this one. Okay. Normally price tends to go back to its average. Okay. So you will see sometimes if the price has come away from the this 20 EMA moving average, it tends to go back and touch it again. Okay. These are some basic ideas of moving averages. Then the another moving average I use is the 200. Again, in 5 minutes time frame, moving average may not be very much useful. The shorter the time frame, the lesser effective is the indicator. In higher time frame, it is more effective. But again, these thumb things I want to watch. That's why I keep these indicators on. Okay, you can compare this with something like you are driving a car. We have in front in the instrument panel, we have the battery, and then fuel level, odometer, the RPM, right? But we don't watch everything together and at every moment to while driving. But something we always watch is the speedometer. So that's why this is like something good to have for me in the screen, but I will not go for all the things at the same time. The major thing I use is the price action from the pivot points or pivots. Okay. You can draw your like own support resistance levels. Also, sometimes, as you saw in the beginning, there was a red line here that I might have caught my eye, so I drew it some day, and it's still like holding. So okay, so pivot is there, central EMA. Yeah. So one more thing I keep on is super trend. If you keep too many indicators, it will hinder your means you cannot view the price properly. This is, as I said, this is all that I am using. It doesn't matter for somebody else may not use so many indicators or at all. Only price action and support resistance levels they might be keeping. But this is what I am comfortable with because of my familiarization with this type of view in the chart. That's all. Okay. Super trend. If you see, there is a this red line and sometimes it is green because of like bullish move. For example, here it is a green line. So this line is called ATR line or average true range line. These arrows, green arrows, or this is the red arrows. This is giving the signal as a buy signal or sell signal. Green is buy signal, red is sell signal. Obviously, in a trending market, this buy signal, then there was a huge trend, so it worked perfectly well. Sometimes you will see false signals happening, especially for these sell signals. Almost all of them has hit. If somebody enters here, it will hit his stop loss. If he has kept a stop loss here, okay. But again, I like 3 years before I used to trade a lot based on super trend because I was like still wanted to have some some holy grail of thing. So I thought super trend is giving good results. Everything gave good results, but not 100% time. Especially super trend totally depends. If it's a trending market, then only it will give you a good result. Okay. And one thing I discussed about the CPR, if the CPR is generally speaking, if the CPR is wide, it's a sideways market. If the CPR, the more narrow the CPR or constricted the CPR, there is a chance of a trending market that day. After 5 minutes of market opening, you will see this thing already is forming. For example, say this is a very narrow CPR here, and there was a big trend that day in the first uh, up to like 11 of the first 2 hours, you can say. Again, uh, no, it doesn't only depend on the CPI because see the market after 11 it is almost sideways. So we have different timing in the market when there is normally a trend and then market goes sideways and then some reactions happen that we see normally at the beginning of opening of the market. There is a huge volatility, right, for half an hour. Then it slows down. This is what I think because of the option sellers who start making up their positions. So like straddlers, short straddles, short triangles. Okay. So you see there's a lot of fight happens after 10:30, 11, normally the market. So if somebody wants to catch momentum in option buying and things like that, then if this is the best time, or else after 2 p.m. some institutional activities happen. Like I think the foreign institutions at Europe and all, they tend to do their major trades at that time. So normally at 2 p.m., at 12:30 when the European markets open in Indian time context, and at 2 p.m. there are some reactions happen. Okay. Now these are many things I'm discussing at the same time. Now just to give you some idea about how I trade or how I traded for the last some few days. See, this market is now in overall the higher, bigger trend is downtrend. Right? If you see a daily chart, it's quite obvious. If you are trading, you all know the market is in downtrend. This is a Nifty index, and it is touching the 200 EMA. Yeah, one thing you must have noticed, once I change the time frame, the EMAs also shifts, right? But the CPR or the pivots, they remain at the same place. Okay. So overall, the market is in downtrend. Uh, since the trend is so high, so that this super trend signal form has worked well. But obviously, if you see this candle after the closing on this day, there was a big up move, and then the down move happened. So some people might have seen this greenish region that day and thought there is a reversal happening, but it is taking resistance from this type of swings, like the swings that is there. So this is how I normally trade. I first of all I have a plan, so I open up the daily chart, see what is the last few days behavior, and if in the here if it is like last time I discussed, this thing caught my eyes. Everywhere I cannot take a decision, I cannot make a analysis, but this thing caught my eye when this candle, this green candle was touching the 20 MA. The super trend 8 year is also acting as a resistance, and we have multiple time resistance here. See, there are big wicks from this level, right? So it gave me some confidence to go on short on this day. And now taking the profit means how much you will hold. As I said last time also, there are three ways to go short. Or for example, either you can sell the call, which is the most high probability winning trade, because the call seller, he can sit for a longer time on his trade and let the decay happen, or adjust his trade or stop loss, or he can hedge it also. Let me open it in 5 minutes time frame. It was second. It's happened on 7th. So some people ask me about position size. If these things catch my eyes, I deploy more capital. If the confidence is less, I don't I keep a size smaller. Okay. So let us go to 7th and see. This was the, I think this was the up move that happened after the US elections. And yeah, there was a continuous up move on that day, right? This is 6th November, when the US election results were declared and Trump won. So that was the up move here. So when I see in a bigger time frame here for 6th in the daily, I am seeing what I'm seeing. There was a rejection at this 20 MA. Already I showed you there have been rejections from here, and we have two. Like if somebody wants to go short, he has 2-3 confirmations. Still, there might be a green candle here also. So stop loss has to be there. That's why I'm not carry. I didn't carry any position. I wanted to see the fresh opening. Maybe the Dow would have pushed more higher, so we could have opened here somewhere here. That will give me more place to short if it is more higher and if it is near these central pivot. Anyway, so when the opening happened, I was just watching the price, how it is reacting on 7th. So the day close, you might be knowing that the day close is itself uh, uh, it itself acts as a support or a resistance. For example, if the day close is somewhere here down, maybe we'll see some other chart, it can actually support also. So the day closes here, and it was a small doji at the 3:25 p.m. uh, candle here, the closing. So I saw the price, it went up here. This whole candle means the price opened here and closed here, and this is the farm closing, and this week is there, right? So it went up to here, and then it started taking resistance. So when I have to give some time. Normally I don't take trade in the first 5 minutes, but here I saw something which I have seen before, this type of candle coming down. At least it will touch this CPR, this central pivot. So I took a short from here, then carried, and then I exited somewhere here. There was another down move, but since these candles were forming, I could not hold it. As I said, since I bought put, I had to have a shorter, because with put buying or option buying, the problem is we don't know where to stop. Then sometimes we do trail stop process, things like that. But I don't like, if I made a good amount of some points I have captured up to my logic of if this has opened with this has uh, been broken with a firm red candle. See, there is hardly any weak on this candle. So this is a firm red candle. So if it has been broken, the next red candle formed, I will just stop here, and I will take out the profit. I'll not wait for another down move, because we don't know there, because overall there has been a big bullish move, and this might be a trend reversal also, we don't know. So anyway, whoever were long here, once they saw this red candle happening, the people who were carrying long, they started booking profits. Maybe they have been long from here, they have been long from here, we don't know. But this is not something like a profit booking or closing of the long positions. Once you started it, I think this one triggered the stop losses of some other people, because see, the market was consolidating in this range for the whole day, almost the previous day. So there are a lot of people who are long here. The market was not allowed to come down, so people kept on adding long positions. So once this candle broke this zone with farm green red, uh, it triggered some stop losses, I guess. So this is enough for me. In a day, it's like 492 to, let's say, for up to this level is 374, so almost 100 points in Nifty. Okay, uh, I don't uh, recommend going short from here with put buying, because see, the previous days low or somewhere it is in this region. So there can be reversal also from this region, especially there is a big swing here. Anyway, that swing was broken, but this is not a place recommended to go short with put option buying. Now, there are three ways to take a trade. As I said, for short, you can either short, you can sell call. If you sell call, say 24,500, it is somewhere here, this one. If you sell the call from here, you can trail your stop loss, and you can sit. As I said, you can sit for most of the position. Maybe 60% you can take out from here, 40% you can keep, and the whole day it will decay. It will give good profit. That is the psychology of the option seller who have sold call from here, for example. As an option buyer, as I said, once the momentum dies down, it's difficult to hold, especially this green candle. It was almost like engulfing this red candle, almost, right? And then there was a small up move also here. So these things sometimes comes back here, and there can be a uptrend, as I said, because the overall the last 2 days there was a big uptrend, and people were thinking maybe the market is reversing from here because already we have come down a lot. It's an oversold market. So for put buyer, I think this is the best place to go out. Otherwise, if he sees changes in his NTM, means the profit he was seeing here, maybe 30% gone, 40% gone here, it's difficult to hold. And the third way of shorting is obviously futures. Futures, you can short from here, hold it, and you can have some like two or means one or more than two targets. That is, you exit half of the position on this pivot, half here, something like that. It can work. One thing is, in future, I discussed last time also, in futures the transaction charges are higher, STT is higher. You can see in Google, in Zero, I think they have a comparison chart also of with transaction charges and total cost. So in futures, the synthetic futures, if you use sensible, you must be knowing. So you can, instead of buying futures or trading, I mean shorting futures, you can do it through synthetic futures. But I don't do all this. But there are options. That is what I wanted to mention. And sometimes I do. It depends on currently, but currently I'm getting a very good shorting chances with put option buying. That's why I'm mostly doing that. And sometimes, like for these day, I was there was a big down move, but here I don't. Already there was a good profit in the morning because I saw this doji, and then these again. This is a known pattern to me. Like the prices opened, when the day opens, the super trend rate here is here in the top, which will act as a resistance, and the 20 EMA is also here, and there is already these things like the 200 EMA is also above that. So market has a lot of potential to come down in this type of. This is what caught my eyes. It can go wrong, as I said. Technicals normally it is said that 70% accuracy is there in technicals. So 30, maybe this is one of those days where the 30% where it doesn't work, it can happen. So you need to have a stop loss everywhere. So this caught my eyes, especially I wanted to see this green candle. There's a small swing here. So once this candle was taking resistance, when the price closed here, I went short with put. See, immediately, if you look here, there was a big, actually this is a green, it is almost trying to cross the closing of these red candles. So if somebody buy put here, he will see a negative first for the first sometime in his MTM. So these are the risk points. So and might be some scalper, he was scalping in some big institution scalping here with the call options or on a long side. So they did the scalping part here. Anyway, so always, as I said, if you are a call seller, if you have sold calls somewhere here, you will not have all this panic. You can sit on your trade, and also in option selling, your position size is automatically means controlled because of the high margin requirement. At least if you have say 5 lakhs in your account, even with some OTM hedge, if you have taken the margin benefit, you will not have a very big position. But if you deploy 3 lakh of that 5 lakh in put option buying, then obviously you will panic more. So there are many advantages in option selling, especially the margin requirement. It automatically uh, controls your position size. Anyway, what I was telling is that I bought some put here, and then my target was this pivot. I went out with, I think I didn't also waited till this pivot, because once this day low is, this is at the moment, this is the candle, the first candle. Once this low was broken, I went out because the position size was quite big. Went out. Then I didn't trade. But these puts went up to, I think, that the 1200 rupees, and I bought it at 221 rupees in the beginning. Okay, so obviously, as I said, this is from 10 to 2 p.m. I cannot sit with a option buy position in such long time. But obviously, the person who has sold call or maybe a future short guy, he can still hold it because he sees all these reactions from the ATR. You see multiple time rejection is happening. Now, the why I was concerned more is, I mentioned that because of this gap between 20 MA and 200 EMA. Normally, price goes back and touch this 200 EMA. I have seen this happening a lot of time, especially post to 2 p.m. to 30 p.m. when short covering can happen. So there are a lot of writers that day, and that was also this day was this day was some expiry day, right? 13th. Yeah. So I didn't want to waste my full morning profit doing something fancy here, because I said before also, I am not comfortable with shorting away from the CPR down, or I'm not comfortable going long away from the CPR somewhere away from the CPR on the top. Okay, so I just sold some calls here. I sold that day. Yeah, this was the bank Nifty's last expiry, weekly expiry. So I sold some calls when I saw rejection happening from here, because I was comfortable with selling call, because with whatever margin I had that day, and the morning I traded with a lot of put long, means heavy positions. So already there was a good profit. So I was, I think around 9 lakh profit was there. So I was just risking like 1 lakh of that profit and took some call sale position, because I have seen many times when these type of move, these long move is happening around 1:32, it doesn't carry. If it is happening around 3 p.m. when the last short covering, or 2:30 p.m., it happens. But this is just my observation. I have no theoretical theory to support this. Many people might have seen this W formation, that is double bottom formation, and it's happening. It's not that it didn't happen. So it was going up, then it took resistance here, and already super trend is giving. Means if you imagine, you are not seeing the, we don't know what is there on the right hand side, right? So imagine if this, if you don't know what is there, right? At this moment of time, what you will think? There is a strong bullish movement. There is a W formation, double bottom formation. There is a strong green candle again, two, three green candles trying to break. And as I said many times, the price goes and touches the 2200 EMA. I can go back and see and show you what's happening. So many people have gone long and immediately, I don't know, maybe the operator or whoever, uh, they use these long positions. I mean, they use this chance to immediately bring down the market. I think Bank Nifty that day moved around 800 points from here. We are seeing the Nifty chart here. Let me show you on Bank Nifty. Yeah. See, Bank Nifty, there is a huge consolidation here. Is for a long time from 1120 to 140 for 2 hours is hardly any movement. 740 and 628. So within 100 points, Bank Nifty is within this range. So many would have thought of going long from here, and there are very nice farm green candles. Okay, but see these candle. So what happened here? Huge long positions were there. People are joining actually. Sorry, some interruptions. I have to let them in. So huge long positions were here. Okay, and as I said, this is just my observation. Around 130, 140, these moves they normally fell. If it is happening at 3 p.m., I have seen very huge up move happening. Okay, and market is already in the oversold region, so many people might have gone long seeing this, and immediately they started eating them. And once this range or this uh, area is broken, so once this range broke with this candle, immediately market came down because of the stop loss being hit. For 2 hours, as I showed you, there might be big long positions happening, and the unwinding that happened here because this was the expiry day. So we know in the expiry day there can be violent move in one direction once it catches the trend. So once this was sold, but anyway, as I told, I already had good profit in the morning, so I didn't buy any put here. What I did instead, I sold some calls, and I saw the calls were melting like anything. So I rolled down the call sell position. Means rolling down the call means I exited one. The calls I sold, I think it was around 90 rupees. It became 30 or 20 rupees. So I closed my position, then deployed the same margin to sell call means at the money call. Okay. Because I was seeing this normally once this type of movement starts, it hardly can come back and give me loss in the sold calls. So I was rolling down the call. I sold call here also around 3 p.m. This is a 3 p.m. Candle. But this gave me loss because there was a 400 point move up from here, 494, and the closing was 264. Yes, around 264 and 300 point move. So these sold all was around. I sold around, I think, 50 or 60 rupees. I don't remember. It ended up in 80 rupees. So not a very big loss. As I told already, there was some profit here. I was having 9 lakh profit here from the put option buying. So I just uh, was risking around 1 lakh profit. But anyway, that I made around 1 lakh from this shorting call here. Last trade was in a loss, which maybe 20-30,000 rupees I lost overall. So this is the advantage of being option selling. As I said, it's always you have better chances to make money or take something at home. Even if market would have stayed sideways, we will make some market money. Even if it reverses and touches here, then also these options strikes. If you have sold, you will give some money. But the same thing I was telling for last time, Nifty, some people were shorting, right? Okay, Nifty, some people were shorting. As I said in my Twitter, this one, that tweet, that call sellers will make money from here, but put option buyer will not make money. See, all the put option buyers premium were decayed. Okay, so these type of adjustment do happen, and the more and more the tendency is just trying to touch this 200 EMA. Now, what we see at the moment, maybe Monday around 8 p.m. Sorry, 8 a.m. We can see if if there is a big gap down or not. So anyway, we have 6 hours left after that. So if you see any good patterns, better to wait and trade. If it's a big gap down, there will be profit booking from the people who have gone short. There will be some short covering. Okay. Now I'll go back to the meeting. I have spoken a lot. I can take some questions. Okay. Yeah, it's the same topic. Only thing I'm just showing you some real examples of how those the one I discussed, how I traded based on that on the last week. Okay, so pivot setting. Okay. If you go to studies, search here for pivot, select pivot points, and then you can right click. If you hold your cursor anywhere on any of the pivot lines, not the CPR, here you will have an option to right click and manage. So you can right click, edit settings, go to the type. I set for Fibonacci, and I have put shading here just for my eyes comfort to catch more. Otherwise, there is no need to put a shading. Also, you can, these lines are there. Depends on what you like. If you want a clean chart, you need not apply the shading. So this is how it's happening. Main thing is these areas where the range is formed, it can either react here and here, and the next day it will act as a resistance. So for example, if we are seeing some so the more near we are to the 23,000 level, which is a psychological level, there will be obviously some try for the bulls to take the market out. So for selling, don't sell near the pivot, sorry, near the CPR. It might bounce back. So wait for a distance from the CPR, or for some other type of bearish, what I guess, bearish signals. This one was very good trade, as I explained last week also, but this seldom happens. We get such perfect positions or opportunity in the beginning of the market. Again, for this day, for example, this is also something I try to trade if there is this type of candle in the first 5 minutes is going long from here, but your stop loss has to be there. The stop loss is the weak, because this weak means there was indecision. That's why this weak has formed, right? Weak means what? There is some indecision here, so we can take use of that. We can go long from here and keep some stop loss down here. Immediately, if you get such a green candle, you can trail your stop loss to the entry point if you have been able to take long at this closing. Okay, if there is a nice green candle, you can trail the stop loss, or you can put profit also. Normally for me, as I said, these things catches my eye, so I take a, if I take a position, I will book profit here, because I don't want, if it is, especially if it is a call buy position, this is enough for me. From 63 to 103 is around 40-50 points, so I'll book all my position here. Yeah, true. I will miss this candle, but why I want to book my position here, because there is a lot of resistance at this zone. The price was consolidating the whole day in this zone. So see, even if it went up, immediately it was brought down. This week means the price has touched here. So what you will see before you see a firm green candle, you will see a red candle, and almost the whole green candle has been eaten away, taken away, right, by the bears. Somebody wants to join the meeting now. Okay. So these things in the live market, it is difficult to hold your position if such things happen. So such a big green candle being eaten away by the bear and you are touching here. So that's why, and why it is happening, because of the whole day this zone has, it was consolidating the other day, so this becomes a resistance point basically. So it has taken resistance. See, once it goes again up, it has been again pulled down. And these moves again happened at 10:20, 10:20. As I said, in these things, if you want to trade, you have to watch the market for these exact reaction times: 10 a.m., 10:30 a.m., 2 p.m., 2:30 p.m. These are the and these are the time in the day when the reactions happen. Obviously, in 1 hour, 30 minutes, I cannot explain everything. So I'm just explaining some of the things that catches my eye. If you don't have Zerodha, you can use TradingView. It gives you, uh, last time also I showed, it gives you also the option to apply pivot. Okay, so this is TradingView. Almost all of these are available. I'm not using the future charts during trading. I use the spot chart only. Some people, they use this future chart, especially if you want the volume. If you're watching volume profile or volumes, then obviously you will not get in the index chart. You have to go to the future chart. Okay. So in TradingView also, if you don't have Zerodha account or you don't have the same chart I was showing, you can apply in TradingView also pivot points. This is traditional pivot. At 20 EMA is again the, sorry, I think yeah. So in TradingView also you can get the pivots, and then the 20 EMA is this red, and the green line is 200 EMA. Once a pivot line breaks a strong candle, then you can go back to other questions. Opening hour is highly volatile, so how you take big trades with so much high conviction? This is 3 years of practice, and if you see my last Thursday trade also, there was a loss position of in the call, so I have to take immediate actions and close by losing the trades. It happens. This is yeah, very difficult. I would say it's not the most recommended way of trading, especially in the first 15 minutes, 5 minutes. But I do, because I am. I see some things catching my eye, some green candle filling, for example. So I short from there, but it's difficult. I'll not. I cannot explain also, and I don't recommend it unless you are also practicing for at least 1 year, 2 year. So because the opening, there are many factors. I see the open interest also. How if there is a big one-sided open interest, there are many things I see. So maybe I'll try to make some small YouTube videos of particular days what caught my eyes, what why I went, why I took some trades. Because last Thursday, I remember now, uh, there was one this Nifty trade that I did. Share the tab. Something caught my eye. That is the price. The super trade ATR is down. So I was expecting a very big up move. I took this trade, but immediately I saw there is resistance here. But these things very difficult, as I said, to explain just like that. But this is what happened that day. So I took long in call option buying, but immediately when this candle formed, I took it out. Then I saw these 2 weeks. See, these whatever we see on the right of this is not visible to us on that particular moment. When I see these type of two rejections weeks happening, I took a put, and my target was only up to here because that was the day's low. Everybody is expecting a big bullish movement. As I said, this is also, I know if this happens whenever the price moves away from the ATR or super trend. This trumps to touch the ATR. This is average true range. I said in all the prices they tend to go back to its average. So even this one, see it touched here. So this is my, but if you see this is a huge candle. So if some person will sit up to here, because I know this is the day's low, the other previous day's low, and there will be support, there will be reaction of going back. So this candle did went back. So this is just a 5 minutes candle. So very, I did some scalping within some seconds, and I closed my position. So this is not recommended way of trading if you are not a scalper. For normal person, if you want, if you trade, if you are having 2 3 hours to trade, it's better you take positions, hedged positions, things like that, and you take up something. You can sell the put here, a put that is more away. That will give you more comfort because you see this type of movement. See, once you are a buyer and you are a seller, there are huge difference in your psychology. If I sell put from here, I will be always afraid that put, because we are in downtrend, so put can go anywhere. As I told last time also, 6 months or 7 months before, there was put going from 2 rupees to 200 rupees in front of my eyes. It happened. I was surprised because I bought those puts for margin benefit, 2 rupees put. Suddenly I saw it became 200 rupees. Luckily, the put I sold, I closed that position, but that bought put was lying in my account just for the margin benefit if I take any position. So anybody who will sell put is always apprehensive. Maybe there is a big red candle coming down. So he will take all the precautions. He will adjust his stop loss and he will book his profit because his target is limited. The premium he has paid, that is the only possible uh, profit he will make, 100% of it. That's like when that will happen only at 3:15, 3:30 p.m. So if he sees something like this, it's enough for him. He will close the trade. But the person who has bought put from here, for example, what I was telling, if he sees such a red candle and it's breaking previous day's low, his greed will drive him to hold more. Maybe it will happen one day. He will get like these continuous red candles, and he will have a huge profit. It is not that he will go wrong every time, right? But again, as I said, the psychology has to be maintained because one day's profit should not be 5 days loss. Uh, we are allowed to make loss as well, as long as that loss is within your risk profile. Like if you're losing 5% of your capital, I think that's the minimum type of risk every intraday trader is taking. Maybe if you follow a very strict rule of 1% loss, 2% profit, then obviously your position size will be different. But I have seen what becomes so obvious doesn't happen. Once this green red candle, then another red candle, market gives you money like anything. It doesn't happen like that. See the reversal that happened here. Anybody would have bought put this 23,600 put, for example, is already getting 100 points. Get out of the book. If you want, you can sell call after that. I do sometime just to have something out. But because it's a huge reversal, so if that put would have lost his value like anything here. These move happen, that is fine, but these moves we cannot predict. Okay, so you book your profit. You wait, as I said. See, this is what 10 a.m. 10 10 5 reactions happening. So you book your profit, sit it, sit. If you want to short, there is 6 hours. You have 5.5 hours left, and this is the zone where if the price comes, is the best to short because see the whole swing is here. Last day also we saw a big down move from this one, so there is a supply zone here, right? And if I mark this, you will see beautifully it is the same place from where the selling came, right? If we see the, yeah, stop loss zone here last time, the same place from where the selling is coming. So you mark this location to stay. You don't have to mark also your CPR, your central pivot is here, and it is taking resistance from here. You if you see such confirmation, you take a bearish trade, you will make good money. Even if you take a trade from here and up to the ATR, super trend ATR is your target, touches, that's fine because sometimes I have seen this reversing from the ATR, especially if the ATR is down away from the CPR. As I told, I'm not comfortable sitting on short positions away and down from the CPR. You can backtest. I can show you here, but you can also backtest yourself, and you can see what I am telling has happened. And again, we all know that for option buying, you have to have momentum. If you have entered somewhere here, you will just lose your patience, you will lose your money, everything is decayed. Okay. And this is the 11, 10, 15. After that, it's not good for time to do option buying. Let me try to show. In Bank Nifty, before I used to trade a lot in Bank Nifty, I can show you that type of what I'm telling, that super trend ATR thing. Yeah, this day, let me show you this one. In this movement, this is something which will catch my eye in future. Okay. There is big down move, okay, but this is the previous day's range. It is trying to break down, and it gets rejection from this pivot level. This is like 10 minutes. If you wait for 10 minutes, don't go short here. If you go short, you book your profit or somewhere, because this shorting here is not at all recommended when it has just broken the pivot. There is sometimes retracement and then shorting is better. Okay. But these two candles will give me a lot of confidence to go long. If I go long with future also, it is decent. You can hold it long. If you go long with call option buying, this is the place, the touching of the 200 EMA, that is all will be my target. I cannot sit for this long. Maybe some people, even if call option buyer, just sit with trailing stop loss and all those things, but I don't follow them. That means I don't follow that rule. If it is a very good momentum here, and already this type of movement means the call option would have been very good profit. I will close no trade. It will not be a buying trade, probably future long or put option short, because I know this is now near the CPR, and most of the time if it has crossed the previous days this range, so this will act as a support. Now this whole range will act as support, so it is good to have some long, preferably future long is better, because put option selling, again I said, if it is like expiry day, 0 day to expiry, or how, what will be the put price, I don't know. It will be very less. It's not correct to sell that cheap puts. Better to go along with either you can do a bull call spread, or you can buy future. Normally I buy future, because in future I will put my stop loss, and I can adjust my target together. But in option buying, whatever broker I'm using, Upstocks and Zero, that I cannot put at the same time stop loss and target. So basically I have to exit at some comfortable zone. Identifying short covering at earliest, I sometimes share in my tweet also. There are certain things like in the open interest, if you see too much crowding, uh, let me show something here. See this, I'll show you something that caught my eyes one day. Where the day, if I can find it here. Yeah, this is the day. So this is one pattern. It is not happening every day, but this is something caught my eye. See the price hold, and this was the expiry day, 12 September. 12 September. 12 September was a Thursday. Yeah, this is happening day long. And what is this? This is actually straddle, short straddle building. They are building and they are adjusting the price. So I saw a huge amount of call writing as well as put writing. And I know I have seen this before. This is a CPR, the central pivot, and it's hovering here. Very rarely I have seen sudden move downside, like if something like this. Okay, so I knew a short covering is will come. I don't know this will be like this huge, but again, I did some trade. I took some future long. Once I take future long, my psychology is different. I know my even for future long, the position size is automatically controlled with the margin you have in or whatever means margin is there in your this one. But if you go with call long, calls are damn cheap. This is expiry day at the 1:10 or 1 p.m. calls are damn cheap. Even puts are damn cheap. So even there are one more thing. There is something called long straddle, right? Buy the at the money put and call. Even if you buy at the money put and call long straddle. Long straddle normally, if you see sensible payoff chart, it has the lowest probability of making you profit. But there are places to make long straddle also and can give you profit. At this time, the price is so cheap. Even if there is a bust in one direction, you will your loss in the other. Say you, I think around 1 p.m. Bank Nifty ATM will be 100 rupees, for example, on the expiry day. Uh, it's just approximate. It depends on weeks and other calculations. So if you buy 100 rupee, that for 200 point move, normally the option price goes approximately 100 rupees plus. So from here 181 up to 842, so around 700 points. So almost 300 rupees plus it has gone, should have gone that day. So even if you do a long straddle, whatever you lose on the put, it will supersede and will give you profit. So things problem, we don't have margin money. If some people they don't have margin money, they cannot do a lot of shorting. Even if they short the put, it will not give him the type of money that can be extracted from this type of move. So better to go long with future long, or if you are convinced you can go long, but don't deploy too much money on zero hero because this can become addictive. This happens once. This is chance of such moves are 50%. Maybe it would have just gone here. That's all. I have seen market they get coming back because the call seller, they are big institutions. Okay, so they have the power to control or manipulate. They will not let calls bust sometimes, but sometimes maybe the retail sellers were large in numbers and there was like a stampede when they tried to you know run away from their call sell positions. That's why these type of moves means what this is. Within 5 minutes, this is moving 254 to 200 point candle, 1 5 minute candle. These are all stop loss getting triggered of the call seller. They are getting squeezed. The short squeezing is happening or short covering is happening. So sometimes happen, but this one, as I said, see this pattern. If you remember, this happens. Let me show this one more time. These I saw happening one day in mid cap Nifty. Same pattern. If you remember if somebody remembers the bank Nifty pattern, sorry, it's not here. The bank Nifty I showed you, the similar thing I saw one day in mid cap active. Trying to find it out. Yeah, see, again the same thing. This type of wedge formation happening around 145.2 is a big bust in the call side. Again, see, it is near the pivot, central pivot range. So these are things. These are all observations. It's like the muscle memory. When every day this will not form. So, but when this forms, it catches my eye. As I said, even if you have taken long straddle here, that is buy ATM call and put both in same quantity, you will get profit. But don't go long after such moves because sometimes the market is totally reversed. So you will lose heavily. Especially these are cheap calls, so you don't buy them out of like don't deploy too much capital seeing the cheap call. Yeah, theoretically after the move happens, if you have bought like 18,000, you will make 72 lakhs. I calculate like that, but it doesn't work practically. So better to make some money and leave the table, wait for the next day to come, keep it in your mind. Whatever you saw happening later on, when you find it happening again, you extract some more. So what was the logic of your trades taken on Thursday? Yeah, already I discussed. Maybe you can watch the recording later on. Also the major trade logic is there in next handle. Identify the trend change. There is no specific rule of uh, identifying trend change. Sometimes it works, sometimes it doesn't work. Like for example, the election day fall. The next day, everybody was expecting more fall. I mean, our election day fall, 6 June, I think, or which day. So next day, I saw a double bottom forming. There are W forming there, and I took call by position. It worked well, but these type of things like double bottom formation, then double top aim formation. These are some things that helps. Frankly speaking, there is no. I don't have any specific rule to identify trend change. Sometimes this like the double bottom formation in the election day after the election day, that day I went means I could identify and I used that chance. Idle capital to go for option buying as we don't have much capital. Ideal capital, if like for zero day to expiry, even 50,000. Sometimes it's even 30,000, 40,000. I made double, right? But ideal capital, I don't know. Maybe you need at least 2 lakh rupees, and you deploy, but you cannot deploy capital everywhere and get the same result. What you can do, you have to wait patiently for those reaction times, like 2 p.m. at 0 day to expiry and whatever I showed. If you see that one, because if you have limited capital, you cannot play every time. Your maybe if you have a green MTM, you will see your STT and all the charges have eaten up your profit. And the long run, it happened with me. I was trying some small capital scalping. It was working fine, but huge charges was going 30% of the total profit will go in charges because of the high number of trades. So if you have less capital, you cannot play the whole 6 hours. You have to wait patiently. You have to wait when the prices are cheap of the premium, and then only you can deploy. So at least 2 lakhs you need, means 30-40,000 rupees if you want to deploy in one trade. How long does it take you to become profitable trader? So what was your first profit? First profit was, yeah, I made my more first profit in the first year itself, big profit, but I was not profitable the whole year. Profits can be harmful in the initial phases. That is what my feeling. If I make, I think I made around 2 lakh euro one day, but it was highly trending just by luck. That's a beginner's luck. Profitable after 2 years, I can say I'm not huge profit. But nowadays, because of the market having such big moves, downtrends, I am think it is just luckily I am getting, I'm squeezing out so much profit, especially from put option buying. But I think you need at least 3 years, 3 years at least for an average person to have some uh, view in the market. To profitable means a profit doesn't mean it can be even 5% of your total capital per year. Even that is, if you have made that type of profit, you're already profitable, but you haven't beaten the FD rates, right? So uh, profit being profitable and being more profitable or having a good performance, there are differences. So at least 2-3 years you have to spend in the market. And this setup I'm using for 3-4 years. I don't know how I ended up in this setup. This something done from my own understanding, and I'm viewing this and is working for me. There are other traders who are using something very different. There are some people who are doing in different time frames. They are swing traders. Okay, but I'm just sharing what is working for me. And one more thing, this uh, even if you follow my setup, it is not that you will make profit because the indicators is just for some, as I said, some it's only 10%, 20%, or even technical knowledge. I feel it is only 10, 20, 30% of the whole trading business. Main thing is having risk management and your psychology. I showed you 2 days of mid cap Nifty and bank Nifty. That happens maybe once in 3 months. So you cannot sit for that to happen, and then you, even because we, as I said, you don't know what is there on the right hand side. It might not happen. There are many formations like that, but it didn't go long. Yeah, that same thing what happened on Thursday, many people went long, and from there it crashed. Okay, so, and that was also away from the CPR down. Normally, 70-80% probability is it will go and go up, but even then people lost because sometimes you have to think, you have to bring your thinking same level as the operator is thinking. As I said, if it is happening around 2 p.m., 1 p.m., it doesn't work. If it is happening at 3 p.m., yes, there is not much time left for expiry. So immediately short covering will happen. Okay, once a pivot point breaks with a strong candle, is there a higher probability of it reaching the next pivot resistance support? So you can do it. You can trail it. But you can backtest also. No, whatever setting I've showed you, just go and backtest for 3-4 months. I do a lot of backtesting uh, on my trades. It is not that I am just trading randomly with all these formations. I keep, you read the charts, read for at least three. You have such nice charts available. You can read for 3-4 months, at least 1,000 hours. You can read the charts and see what is happening. Because see, the market dynamics is changing. There is no one rule. It's impossible. Now they have stopping 0 day to expiry. Their 0 day to expiry regime, we saw so many different type of movements which were not happening. 3 years before, when I was trading, 60-70 points move in Nifty is like a big move. 150 points Nifty used to move means that was the biggest trending day in that time, that era. Nowadays, we are seeing Nifty moving more than Bank Nifty. Even some days it is moving, Bank Nifty is moving 500 points, Nifty is also moving 500 points. 500 points move in Nifty in 2021, maybe if you see the intraday, maybe happened only once or twice in a day, in the whole year. Nowadays, even in a month, it is happening two, three times. So, better to do a back test and always think of the loss you will make. You will, if your trade or whatever you're saying is not working. That is more important, as I said. In more than technical analysis, risk management and your psychology has to be there. Always be ready to accept. First thing is that you will make loss. So if you make loss, how much loss you can take, that is should be the first approach on your trade. As I said, don't make big loss. Small loss is okay. Small profit is okay. Big profit obviously okay, but don't make big losses. That is the main thing that can only come from psychology if you are trading manually in intraday in such a small time frame like 5 minutes. If you are doing something else, if you are doing edged positions, risk defined positions, that is best things. But I have worked on them, but I don't like them because I saw the prices I am paying for my hedges are eating my profits unnecessarily. I found something, these pivot reactions and all. This is more interesting, and this is giving me more better result. Means better result in the terms of absolute return on the capital. Do one thing, you any of you just try the 10 a.m. Watch for 10 a.m. and 10:30 a.m. and you will definitely find some pattern. These pattern, even I watch what happens. These patterns will give you some idea because those are the time when the smart money movement is happening. Yeah, we cannot control the market. As I said last time also, we are the small players with the small fish. So we have to follow what the big fish is planning, what he's doing, and save us from him. The same thing happened on Thursday. That certain 800-point fall in Bank Nifty on the expiry day at 2 p.m. As I said, I was not confident to go short there because everything that I have observed was going against going short there. But I was when I saw that strain, that means weakness after those green candles, I sold calls because that I know it's expiry day. 50 rupees call, once these green red candles are formed, it will not go to 200 rupees for sure. That's a 90% probability or 99% probability of winning. How you will trade the huge quantity? Will you use iceberg? Sorry, once. Can we apply same logic and indicator in stock options? I don't do much stock options. I used to do once or twice. These indicators logic might work, should work, because see, the stocks are the underlying in the index. The index is moving due to stocks, so the indicator should work. You can apply the indicator, these settings on the stock options and see if it is working. I don't do much stock options because uh, this I take trades on the market order. Stock options I have to put limit. Sometimes it doesn't get filled up. There's a liquidity issue sometimes getting out and all these things. It's complicated. I'm not comfortable, and so sometimes that particular stock is not moving at all. Since as in mostly I'm trying to do option buying. I do sometimes futures in stocks, but that also very seldom. I'm okay with the index. How will you trade the huge quantity? Uh, Iceberg is not working in Zerodha, I think. I don't use Zerodha much for bigger trades. I am just using Zerodha for, means I stopped using Zerodha at all. I used Zerodha for last 2 3 days because there was some margin there lying and I saw some high probabilities, but Zerodha I don't have much capital there. I'm using upstocks. In upstocks, you don't need iceberg. If you can put a large quantity in limit orders, or upstocks breaks it up and takes the trades accordingly. It's very easy and it's very user friendly. I find upstocks more user friendly than Zerodha. Again, I'm not promoting any broker here. You can there maybe uh, more like better brokers. Maybe Grow also. I think many people are using now. I don't use Grow. I don't have any idea. But my friends, some of my friends, they're using Grow. They say it is very nice. So that's it. I use Upstocks and it breaks my trade orders available on YouTube. Yeah, I did see. I haven't. I am recording this and I'll try to upload if it allows and things goes fine. Then yeah, this will be available in YouTube. All these concepts on learning or too many training. I did some trainings, but I am not using any of the strategies that were taught in those training. You these whatever I'm doing, this is all my own setting. You can see concepts is not mine. Obviously, CPR, central pivot range, and pivots. These are worldwide established concepts. Trading views having in CPR pivot points. That means it is widely known. This is just like so. I am trading with these things for a long time, so I know the reactions happening when the 20 MA touches and things like that. As I showed you some examples, and I keep on sharing in the Twitter whenever this happens. Um in one betting, it will not be possible to tell you everything, but I keep on that's why sharing because each day new things happen, which has happened maybe got which I saw happening maybe 7 8 months before, some pattern repeated that day only. I don't remember everything now, so when that happens, I take the trade and it works. As I said, it is 70% probability, 30% probability it will not work. So that day maybe that day is one of those 30% days where it will not work. So that's why I have to have stop loss. Okay. And for training and all, I cannot recommend any training here in the public forum, but um I have done training which are costing like 5 6,000 rupees only, which is available in NSE Academy. I think Upstocks also they are giving a message now. They have training. So if you want to do any training, it's up to you. But don't go for very high value training. And I'm sure there is no holy grail, or if somebody has a magic formula, he is not going to give it out to you in a training, because if it is making money for him, he will not tell it to you. Okay, and these things are general retail traders who use what I'm using. So in NSE Academy or e-learn markets, and those type of institutions, they already have trainings available. I have attend what I have done is I have attended training from NSE Academy. I think it's mostly within 10,000 rupees, 9,000, 5,000, 6,000. E-learn markets also in the beginning I attended some training that they conduct those trainers in e-learn markets. Not expensive. Yeah, what they taught was not, I will not say it's full wastage of money. You in the beginning you need to have some direction. Okay. And maybe they some of the bread and butter strategies they show it works because they are doing on stock mock, and they did the simulation and showed like this 920 straddle and all. But those are old gone days, so I don't think you can fix anything, any strategy. How to control a bad habit of emotional overtrading? Yeah, I used to do a lot of overtrading myself. That's why you see most of the time I do kill switch. I repent doing kill switch sometimes because I lose a lot of opportunity, but I am okay to preserve the profit because as an option buyer, frankly speaking, it is difficult to protect the profits. Option seller, his profits are less, so his greed is also limited, and he can protect his profit better than an option buyer. Option buying profits are difficult to keep. So just fix your size, position size, and take trades with confirmation. I am myself not being able to take always. I take impulsive trades even now and nowadays, but I take trades as I know my maximum loss. That I'm very clear of what I will lose maximum if my trade goes wrong. That's why you don't see my capital in the full capital in the these accounts also, because I don't keep that capital there. I keep on extracting my profits out and I invest in mutual funds, I invest somewhere else, or I keep it in the fixed deposit. Base time for an intraday buyer. Base time is 2 p.m. 2:30 p.m. Why I'm calling it base time? Because that time you will have a clear view. You will have a lot of candlesticks, these patterns in front of you. I don't recommend trading in the first 15-20 minutes. Do I trade? Means I do trade because of my own limitations. I am working professional. I don't have time to trade in the afternoon and all these things. Even if I trade it, like it's like a small position of option selling or something, which I can close. Means I can keep my eyes away from the screen because of both the stop loss or this thing. Or if there is some big profit in the morning made, I use a part of that profit as a stop loss and trade. But for if you ask me, for ideal time is 2 p.m. or 1:30 1 p.m. though, because if you have a lot of things in your front of your eyes, and the open interest is also like confirmed. Because open interest, you must be knowing it refreshes in every 3 minutes in sensible. So we are not seeing a live open interest. I think the bigger player, they have access to a shorter open interest time frame. I think so. I've heard. I don't. What is the rest? People say after 20 November there will be change. What do you think on this? Yeah, obviously it will change because the day to expiry will go. But I have no clear idea. I don't have so much in-depth knowledge of how it will change. But there will be changes for sure, and it will be easier to trade. For as far as I think, easier to trade in the sense, if you are trading only Nifty, for example, Nifty will get overcrowded. I feel so because of all the other weekly expiries going out. So people will, because again the small retailers, they will try buying options in Nifty. So this is just my thinking. Okay, I think we have already reached 1.5 hours. So we'll call off a day. If you have any questions, let me know in email or in X. I'll try to answer. I'm not an expert, just everyday trader. That's all. I'll try to answer. If you have anything else, you can just put for 5 minutes more, and then we will close off. Thank you.